So we have a great question on my tax debt relief explained video. In that video, I explained how the IRS views you financially, right, to determine what kind of a deal to cut you on your tax debt. You basically want to make yourself look as broke as possible. That's the name of the game. Um, and a vehicle, right? A vehicle is an asset. A vehicle is an asset that the IRS could seize. It's an asset that could potentially count against you when it comes to IRS collections calculations. Your equity in your vehicle, according to IRS math, you may have to include in your IRS offering compromised reasonable collection potential. But what if you're upside down in your vehicle? What if you owe more than the vehicle is worth, right? What if your note on the car is more than the fair market value, like according to Kelley Blue Book or something like that? That's what this individual is asking in the question you can see at the bottom of the screen. And the good news there is if your vehicle's upside down in equity, it doesn't count against you, right? It's a zero, right? You don't get to subtract from your net equity and assets the amount by which you're upside down. It's just a zero. There's no effect, right, on the calculation of your net equity and assets for offer and compromise or other IRS collections purposes. And this can be there can be a strategy here, right? Well, for one thing, remember the way the IRS calculates your equity in a vehicle isn't maybe how you would, because what you do is you take your fair market value of the vehicle, like according to Kelley Blue Book, multiply it by 80%, okay? Then you can subtract out the note against the vehicle, and then from that you can subtract additionally a certain exclusion amount that's adjusted every year. It's not exactly this, but let's say $3,000, right? So you could, so just by way of example, let's say you have a car worth $10,000 and you owe $2,000 on it. You might say, okay, I have $8,000 in equity there. Actually, no. The IRS math here is more beneficial than that. You would actually take the $10,000, multiply it by 80% to get $80,000, right? Subtract out the $2,000 you owe, right? So now you're down to $6,000, and then subtract out the $3,000 exclusion. So only $3,000 net equity in that vehicle. Now, there's some planning here, right? Because let's say you have cash in the bank, right? Cash in the bank will count against you, right? IRS is going to want that, right? Offering compromise, you can subtract $1,000 from that, maybe subtract 1 month's of living expenses as well. But if you have significant cash in the bank, one strategy here is if you're upside down in your car, maybe pay off some of that car loan, right? To reduce your cash in the bank that's going to count against you for IRS collections purposes. But by paying down that car loan, right, that you're upside down on, right, as long as you don't pay it off enough so that you would have equity in the car for IRS offering compromise purposes. That's the way to kind of manage your cash, right, when you're dealing with IRS collections. You see what I mean? There's some concerns that might be considered what's called a dissipated asset, right, because the IRS would say that you should pay them first before you pay off your car note. But this is a strategy we've used successfully for clients, even in offering compromise situation, and hasn't really raised any eyebrows, right? You probably just don't want to move that cash you want to wait a few months to submit the offer before after you make that move, right, to reduce your cash and put it into the car note. So anyway, that's probably getting a little off tangent here as kind of an advanced strategy. Maybe I'll talk about more of those advanced strategies on how to deal with cash, right, if you're going for an offer and compromise in a separate video. But to answer your question, just plain and simply, if you have a vehicle upside down in equity, vehicle has no effect in and of itself on your net equity and assets for IRS collections purposes. All right, folks, thanks so much for watching. I have other tax relief videos here on the left-hand side of your screen. You can visit us at Choice Tax Relief. There should be a button popping up here. You can visit us, fill out the form. We'll reach out to you, and or you can give us a call, 866-8000-TAX. That's 866-8000-829. All right, folks, thanks so much for watching. See you in the next video. Bye-bye.